Another week, another highly anticipated money-making opportunity. That's one of the most lucrative trends of the current financial climate that we find ourselves in right now. In today's highly macro-driven markets, they are fueling one of the greatest wealth transfers that we have seen. This is presenting savvy traders with a series of exciting back-to-back money-making opportunities. There's no denying that August that started off with a bang, bringing with it a series of extraordinary money-making opportunities. Everything from stickier than expected inflation to a brewing global debt crisis to the US being stripped of its AAA credit rating. And just in case that wasn't enough, traders are now on the verge of being gifted even more lucrative money-making opportunities, with Saudi Arabia determined to keep cutting production until oil prices hit $100 a barrel, all topped off with the most hotly anticipated event of all, the end of the Fed's most aggressive interest rate hiking campaign ever seen. Now, last week, rating agency Fitch, they surprised the markets by downgrading the US credit rating from AAA to AA+. This comes as successive standoffs over the nation's debt ceiling and rapidly ballooning federal debt. They have cast a doubt on the United States to meet all its payment obligations. In Fitch's view, the rating downgrade that reflects the expected fiscal deterioration of the US over the coming years. Their analysis that suggests that debt to GDP in the US is expected to rise from 98% of GDP in 2023 to over 121% of GDP in 2033, reflecting weaker federal revenues, new spending initiatives, and a higher interest burden. As of today, the US holds more than $31.5 trillion in national debt, which is just above the recently suspended debt ceiling of $31.4 trillion. And the interest rate repayments on the debt, they're close to hitting $1 trillion for the first time ever in history. Put another way, that's more than the US education, veterans benefit, and national defense budget combined. If the Federal Reserve, if they continue to hike, that would ultimately increase the odds of a US debt crisis becoming the next black swan event. Most economists, they've long felt the Federal Reserve, they've gone one rate hike too far, and now with the odds of a US debt crisis brewing on the horizon, an interesting debate is raging as to whether the Fed is done or close to being done with its rate hike campaign. The answer to this question may come from the hotly awaited US consumer price and producer price inflation figures due to be released next week. Now, last month, consumer price inflation, that rose 3% on an annual basis, calling from a 4% rise in May, while core inflation, that came in at 4.8% in June, down from 5.3% seen in May. Those figures significantly boosted the odds that the Fed's recent 25 basis point rate hike is the last in this cycle. A further easing in July, that will almost certainly cement the case for the Fed to hold off raising interest rates again in September. That presents huge bullish tailwinds for commodity prices ahead. On the inflationary front, one of the biggest obstacles facing the Fed is Saudi Arabia. Oil prices, they skyrocketed last week after Saudi Arabia, they once again announced plans to extend its production cut for at least another month in a move to drive oil prices higher. Due to Saudi Arabia's recent push to sign expensive footballers like Cristiano Ronaldo and build futuristic megacities, Saudi Arabia, they require higher oil prices to pay for its ambitious economic plans. In order to just break even, Saudi Arabia, they need crude oil prices trading above $85 a barrel. Anything below that, that puts them in a budget deficit, ultimately to fund their ambitious economic plans. Saudi Arabia, they need oil prices between $90 to $100 a barrel, and they seem determined to make deeper cuts if necessary to achieve their desired outcome. Last week, oil prices, they posted their sixth straight weekly gain, the longest streak in more than a year, taking current gains over 32% from the recent lows. Elsewhere in the energy complex, gasoline prices, they surged to more than 9-month highs. In total, 27 commodities, ranging from the metals, the energies, to soft commodities, they've tallied up astronomical double to triple digit gains already within this quarter. And this could just be the beginning. But make no mistake, this is not a buy and hold market. These exciting and fast moving markets, they're creating the most optimized environment for traders. So far this year, we've seen commodity markets notching up explosive double-digit gains to the upside and the downside in a single week, sometimes in a single day. Not once, not twice, but on multiple occasions. For traders making money in these markets right now, it's never been so easy. The week-to-week short-term macro-driven trend that we're currently seeing right now can literally be summarized as buy low, sell high, rinse and repeat, and do it all over again. Take this month, for example. We've seen huge explosive moves on every commodity imaginable, from the metals, the energies to agriculture, which has gifted traders with endless opportunities to capitalize on both sides of the big market moves to generate spectacular gains of 10% or higher in a single week, sometimes in a single day. Just think about that for a second. In today's inflation adjusted terms, your money sat in the bank will not even earn that return in a year or even 5 years from now. Right now, we have opportunity on top of opportunity. This is the time that traders, they wait decades for. It's times like these that make millionaires and billionaires out of regular people. There's a lot of traders out there, they completely missed out on two of the previous greatest wealth transfers in history, including the global financial crisis in 2008 and more recently the pandemic in 2020. The ones that saw the opportunity and knew how to capitalize, they accumulated life-changing wealth. But once again, we find ourselves at the forefront of one of the biggest wealth creation opportunities of all time. And this explosive cocktail of events that is currently unfolding, it now presents the third greatest wealth transfer of our lifetime. According to Bloomberg, 1 in 2 people, they've now turned to trading to protect their hard-earned wealth from devaluation, whilst also capitalizing on the high returns on offer in this new economic climate that we find ourselves in right now. More millionaires and billionaires, they will be made this time round than ever before. The only question is, will you be one of them? Definitely do not underestimate what you can achieve in the next 1 month, 3 months, 6 months, or even 12 months from now. Here at the Gold and Silver Club, we're consistently banking over 10,000 points profit per month, which we've been transparently documenting through our weekly videos. So if you're trading at one lot, that's $100,000, or if you're trading at 10 lots, that's $1 million. The majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6 and 7 figures, and we're only halfway through the year. Historically, each time commodities have started the year on a positive note, they've always gone on to finish the year outperforming every other asset class out there. The first half of this year, it's just been a taster of what is yet to come. If you want to take advantage of these extraordinary markets and huge money-making opportunities on offer, there's no better time than now. Go to jointhegoldensilverclub.com to learn how our mentorship program can take your trading to the next level. Investing in yourself is the best investment you will ever make. Your future, it is created by what you do today. Make investing in yourself a priority because nobody else is going to do it for you. So with that, let's move over to the charts. I'll talk you through our current positions in the portfolio and what we're really looking at here as we head into next week. So here's one I did earlier. We've been going through it with respect to what we're anticipating as we go into next week. So firstly, we have a position on gold right now, which is sat at $1,915 per ounce. So you can see that trade at the moment, it's up just under about 300 points into Friday's close. We did get the expected pullback. We talked you through last week on the reports in the lead up to non-farm payroll. I was expecting a dip coming back into areas of liquidity. We absolutely did that. In fact, you can see we bang on hit the 200-day moving average there on Friday, and we subsequently had a reversal with gold holding again, closing back above $1,942 per ounce. We've taken the opportunity to top up another trade here on Friday before the close. I am expecting the potential over August for gold to do well, particularly once we start moving into next week's CPI data, and also as we move closer to the Jackson Hole Symposium, which will be later on over August. Historically, gold does tend to perform very well over the month of August. My ideal scenario here is we do get a breakout back towards the swing highs here, so we make a run back towards the recent highs of 1985, and then we start magnetizing back towards $2,000 per ounce. As I mentioned before, any dips here that we would see on the back of non-farm payroll, I would look at that as an opportunity to add to gold here. So we've absolutely done that, and that would be my expectation essentially. Now, it's possible going into next week where we may back and fill a little bit here. You could even see another retest back down towards these prior lows that were tested on non-farm payroll, but ultimately I am expecting higher prices over the month of August for gold. Now with platinum as well, we continue to hold a position on this market at $909 per ounce. You can see that trade is currently in profit into Friday's close. So again, we're up just under 200 points on that position. The trading setup here is very simple for this market. Ideally, I would like to see platinum start to pick up momentum as we go into next week. Again, this market typically does tend to perform well throughout the month of August, but if we were to roll over, come back down towards areas of liquidity, so $900 per ounce or lower, this is where I would look to reload a position and add to the trade that we've currently got on platinum right now. Now, as I mentioned last week on oil, I'm looking after we banked last week. So we banked 1,220 points profit. We bought Brent crude oil all the way down here. We had two positions on. Our latest position was on at $73 per barrel. So you can see the lows here that we caught, and the other trade was on just below that we previously, and that was on at the 71.96 level. So we've taken the opportunity over the last 4 weeks, so you can see where we snipe it in here right at liquidity. We've taken now the opportunity to bank with the price action breaking all the way back out to the highest level since April. Now overall you can see where we got the initial breakout. This is where we banked right at the upper end of the channel here. So again, it comes back to the point here. You want to buy obviously low, sell high, and rinse and repeat. But what I'm looking at in the short term here is for some pressure to the downside as we go into the next couple of weeks here for oil. So if you actually go over to, for example, some of the correlations here, you can see, for example, that heating oil is back under pressure. Gasoline is certainly breaking down at the moment, and you've got similar price structures on WTI crude oil as well. So in the short term, I'm looking for a dip here lower on Brent from the very upper end of the channel. You can see where it's come back. It's hitting liquidity here again, so it's come back up to areas of resistance. Now, it's possible it may need to spike a little bit higher, stop out more of the sellers in this market, and then start reversing lower. Or going into next week, we're going to start seeing this market reverse. If you look at some of the lower time frames, you can see where we're starting the potential to roll over and break down. It wouldn't take a lot to start seeing this market break back down and get to levels that would be attractive to bank some profits and then start protecting trades. As you know, last week I mentioned on Thursday's report, we are shorting oil here. After, though, we've banked right. We've been long the whole last 4 or 5 weeks here on oil. We're banked right at the swing highs here for 1,220 points profit. We caught the swing lows and we're banking right at the top here. And now, short-term play, I'm looking to capitalize on the price action if we start seeing further profit taking and a rotation lower here for oil as we head into next week. Now, moving over as well to silver here. And I'll also just touch upon what we look at with respect to copper and palladium too. So firstly, moving over to silver. So ideally, silver, I'm not really interested where it is at the current prices. Obviously, I like gold at the current levels where we are, but silver, I would rather, if I'm going to add to this position or get in again, I would look to get back in at lower prices on this market. I'm not really too interested in getting in around the current levels. Ideally, it performs well alongside the other metals as well, but if it doesn't, it rolls over. These are much more levels of interest if we break back down towards the price swing lows. If we have a look also at copper as well, copper is doing its usual thing, which is to be under pressure at this time of year. You have to bear in mind, since the downgrade that we saw last week in the USA, we've seen basically S&P 500 is dropped 2.5% in the last week. You've seen tech stocks, they've dropped 3.3%, so NASDAQ has dropped 3.3% in the last week here as well, and this will typically have a knock-on effect with copper, and that will then typically have a knock-on effect with oil in the short term as well, which is what essentially I want to capitalize on right now. And whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action to really give yourself the gift of a better 2023. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, then you need to adapt your strategy to the current market conditions. Most importantly, utilize a professional, research-driven approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy and certainty. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who simply rely on outdated technical analysis and gimmicky technical indicators that don't work in these markets. If you want to get yourself out of the bottom 99% and into the top 1% who are actually crushing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis, outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already massively stacked up against you. If you want to change your results, you have to change your thinking. If you want to learn our exclusive research-driven approach that is never taught to retail traders and only reserved for professional traders in banks, hedge funds with access to powerful game-changing insights, including where banks and hedge funds, they're buying and selling in real time, the key liquidity zones so you can enter and exit the markets with pinpoint precision, the fundamentals, the macroeconomics, the capital flows, alongside the daily, weekly, monthly, and quarterly real-time data-driven cycles and the intermarket correlations, then you need to join our mentorship program. As we head into the new year, we are in one of the greatest eras of wealth creation the world has ever seen. If you want to successfully capitalize on the huge money-making opportunities ahead and build significant life-changing wealth, there's no better time than now. If you want to upgrade your income, then you have to upgrade your skills. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will get in touch with you ASAP.